What's up? What's up? What is going on? I'm going to show you today a better way to enter a stock than using a market order. A market order is the worst way you can enter into a stock, especially for day trading or swing trading, or anytime you want to get an exact number or you want to get in to the stock at an exact value. So what I can do, instead of using a market order and getting filled at the worst possible price, because that's what would happen, I can instead use a limit order. All right, so what I can do is I can place a order. Let's just say we'll buy 100 shares here, and we'll place a limit order for 74.20. Now what's going to happen is, right now the price is at 74.56 or 74.60. It's fluctuating. What this is telling my broker is that I'm willing to get into the stock or buy shares of the stock at 74.20 or lower. This means that that order can sit there and I will not get filled unless the price comes back down to 74.20. It's a lot better than a market order, because if you use a market order, you're going to get filled at the worst price. So let's say I entered using a market order right now on Roku. If I use a market order right now on Roku, you can see that the worst price, the ask, is at 74.75. So watch this. I'll enter. I'm going to get filled. I got filled at 74.77, which is like the worst possible price, right? You can see that little thing that popped up on the corner of my screen. It said I got filled on Roku at 74.77. Now, to me, I don't want to be getting filled on Roku at 74.77, the worst possible price. What I want to do is I want to wait for the specific price that I want to get filled at. Now, if you're taking like a long-term position that you're going to hold for years and years, a couple cents, 20 or 30 cents isn't really going to matter. But if you're day trading and if you're getting filled that far above where you want to get filled, it's really going to mess up your stop loss and the amount of shares that you need to buy, right? Because we calculate our shares based off of where we enter and based off of our stop price. So if I'm entering Roku at 74.77, and I wanted to enter at 74.20, and everything that I calculated was based off 74.20, that means I'm already entering 57 cents higher than I actually wanted to. So the problem is with limit orders is sometimes the price won't come back lower. Eventually it usually will though. So what I will do a lot of times is I'll wait and I'll enter on a limit order. If not, I'll choose to just miss the trade. A market order isn't bad if the spread isn't very big. You can see on Roku right here, the spread is pretty small. It's only 3 to 4 cents, so it's not going to hurt you too much.
Order filled.
All right, so see what happened? We put the order in at 74.20. Roku came back to 74.20, and we got filled. Now, many people might say, well, you missed the move, you missed the breakout, but not really. Because if the move is solid and Roku is going to actually go higher, then it's going to pull back to support 90% of the times. 90% of the time, you'll get the move back lower before you get the move back higher, okay? Depending on where you're entering, what kind of stock you're entering. Now, if I would have used the market order, I would have got filled at 74.77. And I did. But since I used the limit order, I got filled at 74.20, and now look, price is already back up at 74.70. So instead, I could have used my limit order to get filled at 74.20, and right now, I could actually sell some of those shares now at 74.77. So I submit another limit order, and then we'll see what happens if I get filled. But most likely, price is going to go back up to 74.77 since we bought there once. Let's see. Traders that actually want to make a lot of money will use limit orders in case they miss the move. So if you miss a move, either just use a limit order or move on to something else to trade. There you go. So I actually did better buying shares at 74.20 and then selling at 74.77. A lot of people may have just entered on a market order at 74.77 because they were afraid they missed the move, and then the next thing you know, they actually lost money. So, or they might not have lost money, but they got filled 57 cents higher than we did. And that's a substantial amount. Right now, price is at 74.88. I'll go ahead and sell these again. The other way to use a limit order is if the stock is ahead of you, like right now, 74.96. Let's put in a limit order for 74.95. What that's telling the broker is that I'm not willing to get filled anything less than 74.95. That means I only want to sell my shares at 74.95 or higher. Limit orders are the best way to sell your shares at the exact number, and often they're a pretty good way to buy shares on pullbacks or when you've missed moves. Now, there's a better way to enter a trade, the very best way, and that's called a stop limit order. And if you want to see how to use a stop limit order, then watch this video here, and I will show you exactly how to use a stop limit order, which is the very best way to enter a stock at the exact number that you want to get filled at, and it's the best way to enter stocks on breakouts. All right, see you in the next video.